Hello and welcome to our Minds and Money 5 at 5 show, which today is sponsored by KEFI Minerals, Marenica Energy, Predictive Discovery, and is brought to you in association with Resource Global Network. For those of you attending 5 at 5 for the first time, the aim of 5 at 5, 5 guests at 5 p.m, is to maintain engagement between investors and miners through a lively interactive format whilst we wait the return of physical events. A few admin announcements before you start. To make the session as interactive as possible, please have your video switched on. And to ask a question, you have two options. You can either submit the questions via the chat function, and the chat function you'll see is at the bottom of the screen. We can also go and unmute you. You'll see on the invite participants, you can go and request to be unmuted, and you can go and ask your question live. We'll also be having polling questions throughout the webinar where you can also go and vote as well. And again, being towards the end of the week, we encourage you to bring along a glass of wine or beer to relax, sit back and enjoy. For this week's show, we have a great we have an African themed focus, and to discuss this, we have a great lineup of guests. They are Harry Anagnostaras-Adams, Executive Chairman of KEFI Minerals, Murray Hill, Managing Director and CEO of Marenica Energy, Paul Roberts, Managing Director of Predictive Discovery, Tim Markwell, Head of Africa Funds of Alain Select Group, and we may also be joined by a couple of other investors as well. So without further ado, as today's show is all about African mining opportunities, can I please ask my colleague to go and, my colleague Alain, to go and get our first polling question up on the screen. And the first polling question is a very straightforward polling question to go and kick things off. Are you looking to invest more into African mining projects companies in 2021? So whilst you're all voting and giving your answer to that question, can I perhaps please bring in Tim Markwell, who's the head of Africa Funds for Alain Select Group, for the Alain Selection Group. Tim, can you perhaps sort of like just tell us about what your outlook is for the African mining industry for 2021, and also for the audience who are a little bit unfamiliar to Alain Selection Group, can you give us a bit of a background as to who Alain Selection Group are?
Yeah, sure, no problem, Andrew. So Alain Selection is an ASX listed company. We're an investor in junior mining stocks. We've been around for more than 20 years, and a lot of that history we've been investing in Africa. So it's been a very big part of our investment period, and we've made quite a lot of money in Africa, both directly and alongside a series of development bank partners, mostly Europeans. We're still actively looking at African opportunities directly, and it's going to remain an important part of our investment universe for the foreseeable future. Look, we know it well, and we've had as I said, it's been a happy hunting ground for us, shall we say. Our recent focus has been surprising in the north of Africa. We've got a phosphate investment there called Selamin. Now they've had some issues there, and we've been working with them for the last couple of years, helping them recover this phosphate asset, and it's been a good end to last year where they managed to get the asset back. So this company Selamin looks to have a clear runway ahead of it for this year, and we're hoping that they start getting on the ground and getting active. With regards to trends for 2021, it's obviously a little bit complicated with the impact of COVID, as we're all seeing. But this aside, I mean, the key things we're looking at and thinking about is 2020 saw a lot of money raised, particularly in gold. So there's a lot of junior explorers with healthy bank balances, and that's going to be spent in the ground as much as possible. So we're thinking it's going to be quite an active year for news flow and exploration, which is obviously be a good thing. An interesting fact that my colleague Hedley Widdett picked up recently is in 2020. More funds were raised on the TSXV than the TSX, and that's a pretty interesting fact and a very surprising one. You would think that the exchange of juniors has raised more funds than the larger company exchange. So there will be there's a lot of cashed up juniors, and this is a move of capital to risk capital, and hopefully because it's going to risk capital, they'll look more into the more risky jurisdictions, and I guess that's Africa. I think we did see an aversion to that recent, the last couple of years where Australia and Canada were a focus of a lot of the funds, and with that increased bank balance and the increased risk appetite, we were hoping that more of that goes into Africa. And there were discoveries made last year too. I think Paul's going to talk about one today. His discovery in Guinea, which will be pretty interesting. And if companies like that can turn things into resources and development projects going into financing and developing, that'll make the market a bit more interesting as well. Consolidation is something that's also picked up. We've seen a few top 10 gold producers emerge recently. We've seen protracted takeover battles with something like Cardinal in Ghana. We've had the Teranga and the Endeavour merger. So there's probably more to come. There were a few companies that didn't get the acquisitions they wanted, and that's left a bit of appetite, I think. So I think the time is right for more consolidation, which again is something that propels market action.
Okay. I think we're also now just joined by another one of our investor guests, who's Alain Corbani, Portfolio Manager of Finance SA. Welcome to you, Alain. It's Andrew Tate here from Minds and Money. The question that we were just sort of like posing was to sort of like pick out a sort of key trend for the African mining industry for 2021. If you had to pick out a sort of a key trend from your like fund manager experience, what would be the one key trend that you would pick out?
It's a very good question, because I think that whether it's Africa or another country or continent, actually, there is this ESG trend that is very important that the whole industry is going to face in a very, very meaningful way, and that will be very challenging. And I think that operating in Africa in itself could be a weakness for those companies, because the whole system might not be as strong in Africa as it could be in North America. I'm thinking about the United States, for instance. So the challenges for the miners in Africa probably will be on the ESG front. So this is the main challenge I see for mining in Africa. But on the consolidation front, it's going to be very, very interesting. I agree. There are many companies who are orphans, and I think that we haven't seen enough activity on this front in 2020, and probably more mergers will be announced among groups of small companies producing sub 150,000 ounces per year.
Sure. And also, just for our like listeners, as a quick follow-up, can you just tell us a little bit about your like fund for like viewers who might not have heard of Finance SA before?
Basically, Finance SA is an asset management firm, privately held, and we're based in Paris, France, and we manage, among other things, a precious metal fund, long-only equity fund, investing obviously in gold mines, but also in silver mines or polymetallic and mines. So all I can say is that, and we are close, and we are very close to Africa, as a matter of fact, and there are a lot of countries which speak French also, and this is the reality. The reality is that there are great assets in Africa, but the reality also is that there are literally higher geopolitical risk in Africa, and I know that saying Africa in itself is a little bit provocative, because there are a lot of countries where nothing has been happening for decades, but where mining is concentrated in some sub-Saharan countries, the risk is real.
Okay, thank you very much for that, Alain. Elaine, is it possible to get up the polling result? I'm hoping it's going to be 100%. Oh, it's a bit of a split there. So 46% voting yes, 5% voting no, and 49% saying maybe. Okay, so I think that probably, without further ado, we've got three great African-focused mining projects who are presenting today. So let's move on to our first mining update. Harry Anagnostaras-Adams was founder or co-founder of Citicorp Capital Investors Australia Investment Company, Pilatus Capital. He's also overseen a number of mining startups during his career. He's currently executive chairman of KEFI Minerals. And last week at our Minds and Money online precious metals event, he actually won one of the pitch battles. So he's obviously got a great project to go and talk about. So over to you, Harry, to go and give us an update.
Just to make sure, Andrew, I should give a little synopsis of KEFI for a few minutes. Is that the idea?
Yes, yeah, great. If you can just give about like a 3-minute synopsis of KEFI. And whilst you're doing that, I'd invite the audience, if you've got any questions, to please post them in the chat box at the bottom of the screen.
Well, KEFI's been focused on the Arabian-Nubian Shield for 12 years, and starting in Saudi Arabia, where other than the government-owned company, we're probably the most established and penetrating, for want of a better word, exploration group in the country. We're the operator of a joint venture with a very large Saudi family as our partner. They're international business people with operations in Europe, North America, and Asia, as well as Saudi. 6 years ago, we acquired a project in Ethiopia, same geology, but completely different, setting in terms of topography. There's lots of soil, lots of trees. Where we work in Ethiopia, it looks a bit more like a tropical island than it does an arid, famine-stricken place, which is what most people think of Ethiopia. And that project actually is in the process of closing its project financing. So we'd expect that to be in full development shortly, which I think is perhaps why we won that pitch battle the other day, because the project is poised to start development. We have two really important projects today. One is the development project in Ethiopia, 140,000 ounce going to 190,000 ounce per annum gold. Start construction within a few months and production 2 years later. And the other one is a recent discovery of a very large VMS system, copper, gold, zinc, silver in Saudi Arabia. That's still being drilled. I feel like it's still growing. We published a maiden resource only 6 months ago, and it's still growing. So, in a nutshell, KEFI has been, if you like, tenacious, focused in the Arabian-Nubian Shield through the dark days of low markets and geopolitical unrest in those jurisdictions. And today we feel we're in quite an auspicious moment of not just the price cycles going for the sector now, but also the country's turning quite voraciously onto the sector to push them hard, to grow hard. It's not just support, it's actually pushing hard to make the sectors come alive. And lastly, our projects on a very high growth trajectory as we speak. So we've got the three factors coinciding as points of inflection, which to us is, if you like, we like to think it's the fruits of our hard work over the more challenging years. But whatever it is, whether it's good luck or good management, the fact is we have these 3 points of inflection coinciding at the moment. Therefore, we're all quite relishing what's looming for the company. Thank you.
Okay. Thank you very, very much for that. Bringing in our investors, Tim Markwell of the Alain Selection Group. I think in your opening remarks, you said that you had a bit of focus on North Africa at the moment. Are you looking at Ethiopia at the moment? And do you have a question for Harry?
We haven't focused on Ethiopia, and I think this is one of our things I was going to touch on at the end. is we tend to like countries where there's a history of gold mines. Like being the first is always difficult, and well done for Harry for getting where he is, because he's going to be the pioneer of the gold mining industry. Or correct me if I'm wrong, Harry, but there's it's always hard to be the first. So we like there to be a history of successful banking with a project. So I think we've sort of sat back and would like to have a bit more success in Ethiopia. Something when Harry gets up and running and paves the way for the others. That's been sort of our attitude with Ethiopia.
Yeah, in terms of the industry, we're the first modern development for some 3 decades. There is an industrial scale other project of similar scale, 100 and something thousand ounces, private company. There is quite a large artisanal, industry, 300 odd thousand ounces per annum. But yes, we're either the clever ones who are the first mover in modern times, who will reap the rewards of a wonderful pipeline of growth opportunities from pole position, or the ones that you can watch for a few years and then decide to get in, whichever way you like to play it.
Just a quick sort of like follow-up question from myself, Harry. What is the area of Ethiopia you have your project in like as a mining jurisdiction? Because I guess when people say Ethiopia, to me, I may have like sort of associate Ethiopia as being a relatively risky sort of like country.
Well, it's how would I put it? A perception which I think is driven by the amount of airtime Ethiopia gets in the media as much as anything else. I mean, obviously there's been instability and conflict there. But the first statement to make is that independent assessment of where it rates on security risk, whether it be by multinational risk assessors and security firms like Constellis or insurance sovereign risk types insurers. It ranks about middle of the road for Africa, about the same as Ghana, and on the rankings I see, safer than, say, Mali or Burkina Faso. But having said that, it unleashed democracy a few years ago, and before that it was more stable in the sense that it was very, toughly controlled. But unleashing democracy brings with it all sorts of pent-up, rivalries that have surfaced. They've been well publicized internationally, and the reason it gets a lot of airtime, more than might otherwise be the case, is because it's the base for the African Union. It's sort of like the Brussels of Africa, and every NGO has its office there. Every media group has an office there. There's over 100 embassies there now, and all these guys are standing around every day chin wagging about Ethiopia by definition, and so it gets a lot of airtime. A Nobel Prize winning prime minister, and it's a wonderful country, a fascinating country, 110 million people with pockets of problem areas. But if you step back to that objective assessment of how to run a mine with security and so on, amongst the experts and the African operators that I work with, who've done it all their lives, it rates about middle of the road for Africa. Okay.
Thank you very, very much for that. Can I bring in Alain Corbani from Finance SA? Do you have a question for Harry?
Yes, I do. Hi, Harry. Can you give us some more details about the consortium, and if you still have March 2021 as a deadline for the financing?
Yeah, we bought this project 6 years ago, and we went very quickly through an overhaul of its DFS and plans, expanded its resources, got it fully permitted, assembled banking and contracting, and then the country started wobbling as it approached democracy. And so our then bankers ran over the hill and said, let's wait for this to settle down. So we effectively slowed down for, I suppose, 3 years. And the outcome of that process is that the consortium is quite dominated now by Ethiopian embedded entities that know the country and are quite sort of committed to the country. And for instance, the two senior lenders are Trade and Development Bank of East Africa, with its regional headquarters there, with Ethiopia as one of its shareholder countries, and already transacting in the country. And the other one is AFC, African Finance Corporation from Nigeria. And so they're both African banks who were there in December with us, with their technical experts to complete the due diligence tie kicking exercises that one goes through and finish that off. And there we were in the middle of COVID, in the middle of some unrest about 1,000 kilometres north of Addis, all finishing off these processes, and our syndicate standing up in front of the government and the community and saying that closing is March. The other members of the syndicate are an offtake specialist. We haven't named them publicly yet, but it's one of the big metal, international metal companies providing sub-debt in exchange for offtake rights. And also a local company, which is a subsidiary of a multinational that is reinvesting some of its retained earnings into this project. We have two large contracting, mining contracting and construction firms. But the consortium people who call the shots really are the banks. Obviously, the senior secured lenders are the guys who call the shots, and we'll name them all in the next month or so as the intercreditor agreements. We don't want to embarrass people if they don't square off with the banks on the details of the detailed documentation, but and other things. But essentially, you've got Ethiopian, if not African, if not Ethiopian specialists is the consortium. They were there in December in Addis Ababa, as we all were, and all giving each other their word and to the government that we'd be closing in March, and then funds would flow over the following, a few months in the correct sequence for construction to begin. I hope I answered your question.
Okay.
Yes.
Okay. Thank you very much for that. We've just got time just to squeeze in one quick last question for you, Harry. Question has been posted by Ivan Heron. Does gold mining qualify for Islamic financing?
I don't think gold, a specific commodity, is not the issue for Islamic style financing. It's a style of the deal, really. So yes, gold or any business could qualify as long as it's structured the correct way. Not that that's a factor in our structuring, but yes, it does.
Okay. Thank you very, very much for that. I think in the interest of time, we just need to sort of move on. But you'll see, Harry, there's actually a couple of questions in the chat box for you to go and answer. There's a question from Michael Conan Davis. So if you want to sort of take that offline and answer his question in the chat box below, that would be great. But without further ado, let's move on to the next presentation, which is a mining update from Murray Hill. Murray has 35 years of experience in the mining industry. He's a metallurgist with extensive operating and process plant commissioning experience. He's held management roles at a metallurgical test laboratory and an engineering group, which complements his practical experience. For the 11 years prior to joining the company, he operated his own business, providing metallurgical consultancy services to the mining industry worldwide, including a range of uranium projects. And Murray is currently the Managing Director and CEO of Marenica Energy. Over to you, Murray, for your update.
Thank you, Andrew. Marenica is a uranium-focused company, ASX-listed company, and what a fantastic time to be involved in the uranium industry. We're seeing unprecedented supply deficit levels due to the impact of COVID and also the low uranium price over a prolonged period of time. Reducing production, there's current operations going into care and maintenance, and some not coming out because of COVID and also because of the low uranium price. So, but the demand for uranium continues to grow. The nuclear power generation hasn't declined during the COVID times. There's 54 reactors under construction at the moment. There's another 321 planned over the next 20 years. So the demand will continue to grow. And the only way to get supply to meet demand is to incentivize explorers and producers. Now, the only way to do that is get the uranium price up. Now, we're focused on Namibia. We're focused on Africa. We're in Namibia. there was a point Alain made about ESG. Namibia is a fantastic place to operate in, and hugely different to other countries within the continent of Africa. So I think putting Africa in one basket, as he says, is a bit dangerous. Namibia is probably one of the best countries to operate in. A very, very safe place to be. It's got a very supportive government for uranium mining. Rossing have been operating that uranium mine since 1976 continuously. And we have the Namibian Uranium Association, which is a conduit between explorers and producers and the government, the stakeholders, the public. They do a fantastic job of promoting an industry, and they go around the world actually promoting the NUA brand and what it does for Namibia and what it does for the uranium industry. So Namibia is a great place to operate, and we have no issues being there, very strongly supportive of uranium. So we talked about incentive to get uranium production going. Well, that's to get the uranium price up. So to get the uranium price up, we're well positioned to take advantage of that rise, the expected rise in uranium price. We developed a counter-cyclical strategy to build the business, and whilst uranium price was low, and we developed it through organic and inorganic growth. So we've gone and now pegged the largest land position for nuclear fuels in Namibia, and we're actively exploring. We've explored 2 of our tenements, and we've got 10 tenements, and those 2 we explored on, we found, discovered the Copies deposit, and we discovered Herobeb, which has a mineralized paleochannel. We're looking for paleochannels, which is longer than the width of the English Channel, which puts it in perspective, and where you sit, Andrew, in sunny London. So it really is a huge paleochannel for us to explore. And so we've, and last year we did the largest capital raising we've done in the history that I've been with the company. That's put us in a fantastic position to have enough funds for the next 18 months plus for exploration, and also given us the opportunity to look at different exploration techniques, which we previously couldn't look at. So previously we were looking at geophysics, ground-based geophysics, which is a slow process, doing 3 kilometers a day. Whereas we're now looking at airborne electromagnetics. So we can then get up in the air, get this survey done, cover all the ground we've got, and establish where the paleochannels run, where there might be traps for uranium to be at higher concentrations. And we can do that relatively quickly. That'll identify drill targets. So that's what we're looking forward to with these new funds. And what we have got is we have got the upgrade process. It's an in-house developed beneficiation process, patented in a number of countries around the world. And that is a differentiator between us and our peers. That reduces the capital cost and the operating cost for development by a nominal 50%. That's a huge reduction. So where others are looking at 300 plus ppm for uranium, they'll need a significantly higher uranium price than us to develop that project. So that gives us a significant advantage. So we're excited about what that does for us. We're excited about the exploration ahead of us. We've got success now, and we've got much more success, we believe, to come. And we've also picked up, as part of our growth, is picked up 48 million pounds of high-grade assets in Australia. And the best of those assets, we bought those for 4 cents per pound in the ground. Now, when I consulted to Extract Resources on the Husab project in Namibia, they sold that back in 2013, 14, I think it was. Uranium price was only about $50 a pound. They sold it for $4.50 per pound in the ground. Now, I'm not suggesting our assets are the same as the Husab project. I'm not suggesting we're another Extract Resources, but I'm just putting it in perspective. 4 cents per pound we paid for these. Extract sold Husab for $4.50 a pound. So we're very heavily leveraged to the uranium price in our Australian assets. We're leveraged to it in our Namibian assets, but we've got a lot more than that because we've got blue sky exploration in Namibia. So great position to be in. So we're, and also in our Australian assets, we've added a heap of value. The Angela project is an example of what we can do. We went and did a small amount of test work with our upgrade process. We reduced the acid consumption on that project from 104 down to 24 kilos per tonne. That's a massive 80 kilos per tonne at 40 cents a kilo for acid. Now, ASX limit me telling you what 80 times 0.4 is, but you can guess it's a fairly high number, right? So that's a huge reduction in operating costs on that project. So that's just an example of what upgrade could do, not just on our Namibian assets, but on Australian assets as well. So we're very well positioned, geographically diverse assets. We've got exploration success, and we've got a lot more exploration in blue sky, which we're looking forward to exploit. We're fully funded for at least the next 18 months. We've got upgrade the differentiator, and at a time when the world needs more uranium. Decarbonisation is a thing that we're all talking about, and we're talking about the value of nuclear. So we're looking very good, we believe, for a significant growth in the company and return for our shareholders and investors. Thanks, Andrew.
Thank you very, very much for that. Bringing in Alain Corbani first, I've got a question for you first, and then we'll then invite you to pose a question to Murray. I guess the question for you, Alain, is we've heard a lot about ESG throughout the course of this 5 at 5. How do Finance SA incorporate ESG criteria as part of your investment strategy? And then the second question is would you like to also ask a question to Murray about his project?
It's a very complicated question, Andrew, because the whole industry in itself hasn't been able to get along and identify one simple strategy to report. So we have at least half a dozen different grading systems that are being adopted by XYZ, and the problematic here is to be patient, because there is no other way than we need this industry to just understand that they cannot operate on different levels for the same, basically on the same topic. So everybody is going in every direction, so we have to try to make some sense about the progress they are making, because we are really mainly talking about progress, because the S and the G have never been a problem for the mining industry, right? It's more the environmental side, and the industry is definitely lagging, but progressing. And to be extremely precise, the way we look at it is simply as what progress, what improvement has been made on a sequential base on that environmental front. And that's more or less the best way to be honest in assessing the footprint of those mining companies operating in the world. And we have the tendency to favor North America over some other continents, because we have more transparency and more levels of control than we would have in other countries.
Okay, thank you very much. And then do you have a question to Murray about balance sheets?
Can I just respond to that, Andrew?
Yes,
please. So what we're doing, Alain, is we've got a general manager in Namibia who's an environmentalist. We operate inside national parks, and 75% of Namibia's mining revenue comes from inside national parks. So we're very cognizant of the fact that we need to look after the environment. Now, our process is in paleochannel paleochannel mining. So it's all less than 30 meters deep. So what we're looking at is using a surface miner to come in, pick it up, and drop it into our wet process. So that way we don't go in, drill and blast, create more dust. So that's an environmental impact. And then what we do is we reject 95% of the mass before we chemically leach the ore. So that means that less than 5% of the mass is actually attacked by chemicals, and hence we've got a very, very small chemically leached footprint in terms of the tailings dam. Now, our process also removes the acid consumers, which is a calcite mineral, and that can be added back to the leach tail to neutralize all the acid and make it inert, right, before it goes to a tailings facility. So we're doing, we believe, a very good job for the environment and in our process and what it can add, and also our approach to Namibia with the people we've engaged and how we look after the environment. Sorry, Andrew.
Sorry about. Thank you very much for that. Did you have a follow-up question, Alain, with regards to the balance sheet?
Yes, indeed, Murray. What does the balance sheet look like? How much cash do you have? Do you have any debt? And what's your exploration budget for this year?
So, Alain, we've got no debt at all. We raised $5.4 million last year. We have a burn rate of about $1 million a year. but our exploration efforts are going to consume about $2.5 million this year in terms of airborne EM and other ground activities and drilling programs that we're planning. So yeah, significantly more expense this year than we've ever had, but we're also in the best position we've ever been, with so many targets, with 10 EPLs, and two we've drilled and 2 we've hit uranium on. So we're quite excited about what it brings for us.
And bringing in,
sorry, Murray, can you expand a little bit on your most advanced assets?
So the most advanced assets, in Namibia, we've got the Marenica uranium project. It's a low-grade project. We have the Copies project. We've gone and drilled. We've drilled an area. We've got a paleo channel about 5.4 square kilometres. We've drilled about 40% of that. We've elected not to continue drilling that to get a resource. That will take us about 3 months and $1 million. We've decided that we will redirect that money to blue sky exploration. And an example of that is Hitterbeb. We found Hitterbeb for 120,000. That's the channel that's longer than the English channel is wide. So we know that we've got uranium sitting at Copies. When the uranium price moves, right, and we're incentivized to go and drill that out, get a resource, and then do a feasibility study on it, we'll attack that straight away. So, but in the interim, whilst we're waiting for the uranium price to move, we'll go and explore these other tenements we've got. So that's our strategy at the moment. Just hopefully we'll probably have 5 or 6 Copies to drill in the coming years.
Perhaps I can bring in Tim Markwell from the Lion Selection Group. I guess exactly the same question to you is how do the Lion Selection Group factor ESG as part of your investment strategy? And also, do you have a question for Murray as well?
Yeah, well, we've invested alongside development bank partners a lot in Africa, so we have quite a focus on it. There's a whole process we have to go through to invest, and we have to tick a lot of boxes and go through quite a lot of detail on the ESG. So we've got an actual system that we go through that we do that. It's a lot of time and effort. I mean, I won't go into the detail, but it's a fundamental part of it, and the way the community is brought in. There's been some great success stories with things we've invested in the past where the community, new businesses are started in the community and handed over, and they're sustaining and very inclusive of everyone. So it's a big part. In terms of and it sounds like Murray's doing everything right from what I'm hearing. He sounds like he's right on top of it, which is great to hear. So I mean, my question on Murray is I'm very interested in the upgrade process. That sounds like it's got the potential to unlock a lot of value, especially in the sort of the lower grade paleo channel deposits. I mean, was this something that was modified from a different process, or is this a new process altogether specific for uranium?
It's a new process we developed in-house. We had the problem with the Marenica project being low grade. Do we walk away from it, or do we do something to reduce the cost base and add value? So we decided that we would try and develop a process that we could reduce the cost by, and we successfully did that. So it's essentially a process which uses conventional unit operations that you'll find in a gold base metal mineral sands plant, and we configured them in an unconventional manner for uranium. So what we did is we looked at all the minerals that didn't contain uranium, the waste minerals, and we looked at their properties, and we worked out how we could reject them. So in the process, say if there's a half a dozen steps in our process, the last one is the only one we concentrate on getting uranium into a lower mass. The rest is looking at the gangue minerals and getting rid of them. So it's a process that, because it's quite innovative, even though unit operations are used elsewhere, it is something that is patentable and has been patented. And one of the questions up there is that, it's exciting where you're at with it. We developed Upgrade, and then we realized that it didn't just work for our project. We had the Trikopi project right next to us, owned by Areva and now Rano. We thought, gee, we better patent this because this is the only project we've got. And then we looked at, do we try and sell our process to other third parties? And we went down that path for a number of years, but then realized that the best outcome for us is to go and get our own projects, apply Upgrade to it, we add significant value that way, and puts us a step ahead of our peers. And if we go and sell our process to our peers, well, they're on the same footing as us now. Where do we want to be? So we believe the best thing for us is to continue using Upgrade for ourselves. If third parties want it, well, they can come to us. They'll need us more than we need them. But right now, we think the best thing is to continue with the upgrade process. It's a relatively simple process. So I hate to use the word simple, but when you put it all together, it is not a complicated process, and it's quite an efficient process.
Thank you very much for that. I think in the interest of time, again, we need to move on. Murray, you'll see a couple of questions in the chat box. Feel free to sort of like answer those as we move on to the next presentation. And the next presentation is Paul Roberts, who's the Managing Director of Predictive Discovery. Paul's had a long and successful history in mineral exploration management and mine geology in Australia, West Africa and Peru, where he's been associated with a number of discoveries, including the Henty gold deposit in Tasmania, and more recently, the Bongu gold deposit in Burkina Faso. He's been the CEO of PDI since its inception in 2007. Paul, I think that PDI seen its investors get a return of 60% over the last 3 years. Why is PDI still a good investment?
Well, PDI is a good investment because we're in the throes of delineating what looks like to be a large to perhaps very large gold deposit. And right now, the valuation of the company doesn't reflect that potential, but we're working very rapidly to fill in the gaps, to step out in large chunks as we find more and more of this mineralization. And I think we're all very comfortable that as long as the deposits that we found continue to deliver, and indeed that some of the blue sky that sits there also realizes more discoveries, then the value of the company will increase significantly.
Thank you. And I think you've got a few slides you'd like to go and share with us and the rest of the audience.
Yep. So they're on the screen now. Okay, just very briefly, Predictive Discovery has been in West Africa for over a decade. We have a large portfolio of properties across West Africa, in Burkina Faso, in Cote d'Ivoire, and in Guinea, but the focus for us is in Guinea, and the specific focus is the Bankam project, which is highlighted. Next slide, please, Alain. So these are plan views of the two deposits that we're currently drilling. And what you can see on here is a lot of various symbols, which means that we've done a lot of drilling there most recently, and I'm just going to highlight that a little bit. We've with the new drilling that we're doing, we're finding more gold, and so I can talk a little bit to that. So probably rather than dwell on the details here, the one thing that I would say is that Northeast Bankam particularly, it looks like a quite significant oxide gold deposit. So all of that pink area you see on the right-hand part of the slide is largely oxide gold mineralization, in places hundreds of meters wide. And then beneath that, there's a thicker fresh rock gold deposit, and you can see that in the darker pink, those ribbons of darker pink on that map. Next slide. Okay, so this is just a cross-section through some of the most recent drilling that we reported. We just reported last week, and it really just gives you a bit of an indication of what's happening on a number of cross-sections through this deposit. We've been drilling it on 80-meter lines, and we're drilling this deposit in these west to east holes on 80-meter centers. So we're making big step outs each time. You can see on this section hole number 13, KKODD13, that intersected 44 meters, 1.4 grams, and some other stuff. As we drill deeper down in the fresh rock, we've got 50 meters and then 33 meters, an aggregate 88 meters of 1.8 grams stopping in mineralization. We see similar kinds of thicknesses on other sections to the north and to the south. So there's very considerable potential here to find a very substantial fresh rock gold deposit. And with those kinds of widths, we believe that we can drill it down to 250 meters, even deeper, and to be open pittable. Next slide. And then this is the prospect some 3 kilometers to the west. This is a cross-section in which we've got a couple of diamond drill holes now. Again, the deeper hole was reported last week, so this is all very new news. The shallower hole, the DD20, intersected about 92 meters of 1.8 grams across that zone, and deeper down we continue to find very significant gold, and indeed we're expecting to find significant gold along strike. The zone itself is widening, and in fact that's a pattern that's coming out of the drilling that we're doing, that as we're going deeper, we're seeing grades which seem a bit higher than what we see in the oxide, which is obviously very reassuring if you're going to go into fresh rock mining. We're also seeing widths seemingly increasing on the basis of the most recent results. So there's a lot of potential here to find more. So we'll just stay on the previous slide, Alain, and I'll just make a summary of what's going on. So that's kind of the state of play. We've got these two growing deposits. We've got a lot of potential elsewhere to find more. There's indeed indications of more mineralisation that we've already uncovered on the permits. We have 350 square kilometres of tenement, most of which has never seen, in fact, all of which, apart from these areas, has never seen a drill before. We're in the throes of a 25,000 metre drilling program, and that's really to gain an idea of the scale of these deposits, because we don't really know that yet. And then beyond that, we'll be doing infill drilling, and that's all to take us through to a resource calculation or resource estimation in the middle of the year. We're also planning to do metallurgical test work once we've got an idea and characterise the ore body, and we're not at that point yet. So a very exciting time. At the end of December, we had a little under $14 million in the bank. We're very well funded, and so we're in great shape to do all of these things and more in the year ahead.
Thank you very much for that, Paul. First of all, bringing in Tim Markwell from the Alain Selection Group. Do you have any questions for Paul?
Yeah, I do. And yeah, thanks, Andrew. So, Paul, my question is more on sort of Guinea. And I mean, Guinea hasn't been high on people's priority list for countries historically. I think it's a lot more active now, especially after your success. But for PDI, and correct me if I'm wrong, but as I understand how this project went, you went from high level conceptual review to targeting to permitting, and then drilling ore grade intercepts in a remarkably short amount of time. Time that even in Australia would look remarkable. So it's not really a question; it's more of a comment. So are you able to just go on to that? What was it about Guinea that made that process so quick? And was this an exceptional thing, or is Guinea a lot easier to do business in than what people think?
Well, I'll answer the last part first, and yes, I think the answer is it is easier, although like in many of these countries, you do have to understand the country that you're in, and we found that working in Guinea has gone well because we've been in the habit over more than a decade of operating in Francophone West Africa, and indeed learning that where you begin with, apart from the geological analysis, which is so important and has led us to this success, is where you begin with is relationships. And so relationships are tremendously important for us. And I think other people who go into Guinea and take that same kind of focus will do equally well. The other benefit for us, though, was timing. I mean, obviously, the fact that Guinea hasn't had a very good reputation, and that really goes down back to the time when Lansana Conté was president, and of course the great bribe that was paid on Simandou, which continues to wash through the courts. So that kind of negativity actually comes from something that happened more than a decade ago. And so what that has meant, of course, is that people have been reluctant, particularly Western investors have been reluctant to invest in Guinea. But that is changing. Certainly, there's been a lot of investment in bauxite. The government has gradually improved the fiscal rules, which makes it more investable than it certainly was in the past. And then, of course, we're also seeing evidence of other companies coming in, making investment. We've seen Hummingbird coming in. We've seen Managem building the Tri-K mine. And of course, we've got the old stayers like Anglo Gold who've been there all the way through. So, we came in, if you like, at a time when it wasn't very popular. Our approach is to come in and look for greenfields deposits. So we don't necessarily go and try and find, the hill with 1 million artisanal miners on it, which actually leads to all kinds of problems. We have looked in areas which haven't been so popular, and our conceptual approach has led us to this discovery.
Thanks.
Thank you very much for that. Alan, did you have any questions for Paul?
Yes. Can you maybe we're not going to spend too much time on it, maybe off, but what is this legacy, JV with Resolute? What can you tell us about it?
Oh, okay. Well, so the way this goes back a number of years, we did a joint venture with Toro Gold, UK private, that was bought by Resolute last year. And so that's the reason we have a joint venture with Resolute. We currently have a 26.5% contributing interest in the joint venture. It has turned up a couple of discoveries, not quite big enough at this point, but certainly very interesting gold mineralization. Really, from our point of view, we're interested in reorganizing the arrangement, retaining potential benefit from the upside, but not being in a position where we contribute or dilute. And so, we have been looking at options in that regard, and we're expecting to resolve that reasonably soon.
Okay, so one more question about Guinea. So you mentioned middle of 2021 for a resource?
Correct.
Okay, and right now we're talking, I guess, about an open pit type of deposit?
Yeah, well, it's an interesting question, actually. I mean, certainly our entire focus is on open pit. And so we're interested in drilling it as deep as a commercial open pit can go. And that, of course, is still a bit of an open question. But what is kind of interesting about this mineralization is that we've got a very wide panel of mineralization. It's relatively disseminated style, and continuity is quite good. And in the right circumstances, and particularly in high grade parts of this ore body, there may well be potential for sublevel block caving underneath the open pit. And that, of course, would really expand the potential. There are questions whether it's actually sublevel block caving or another block caving method is an open question. It does depend to some extent, I think, on dip, and it doesn't dip too steeply. But certainly, it's a very open system right now. Nice thick mineralization, relatively disseminated. It's the kind of thing where bulk mining, underground mining methods might work.
Okay, thank you very much for that. I think I'd now like to just kind of bring in our next sort of polling question up. So we talked a bit about mining jurisdictions today, and we've covered off 3 mining jurisdictions: Ethiopia, Namibia, and Guinea. So out of the 3 mining jurisdictions, which one of the 3 do you like the most? And as an investor, and whilst we're getting in your polling results for that, let me kind of turn back to our 2 investor guests for this week's show. If I can both turn to yourself first, Alain, is how do you assess and mitigate jurisdictional risk when investing into African projects? If you had to name one green flag, red flag, what would it be?
The green flag, well, there are 2 green flags. It's management and the asset itself. The red flag would be, because I'm not a historian, but I will rely on history, and I will not rely on the assessment of the management, whatever the quality of the management is, to assess the political situation. So the red flag would be history of the country and the ranking of this country on the State Department of the United States of America.
Okay. And for yourself, Tim, what would be your sort of green flags and red flags when you're looking to assess and mitigate risk?
Sure. So as I touched on before, we like there to be commercial banks actively funding projects, and there to be other projects going. So countries like Ghana, Senegal, Mali, South Africa, Namibia, these places where there's been a history of banking happening, because the banks kind of do the work for you. If a bank has been prepared to fund something previously, that it ticks a lot of boxes. in terms of them being able to invest their capital there. So where there's a history of success and history of banking, that's obviously a big tick. I mean, there's some wonderful gold deposits in countries where they're never going to be developed in anytime soon, and that's just because the countries are unbankable, and unless the government sort of does it itself, it's just not going to go ahead. And so that's the big, I guess, green flag for that. If there's banks there, then that's a big tick. If there aren't, then that's a red flag. And I guess the other one is security. You sort of want to not have to have an armed guard standing next to you very often. If you sort of want to be able to be reasonably safe there. So it's just an aspect of, is it safe to go there and walk around reasonably comfortably, and do you need armed guards? And that's a bit of a red flag. If you do, we're only a sort of a smallish group. We don't want to mess around too much, and it's got to be reasonably safe. So they're probably the two major ones.
Okay. Thank you.
Sorry. Obviously, good geology. Sorry, the one I should have said first. Good geology.
Yeah.
Andrew, one word, because Tim mentioned security, and this reminds me of an example of a mining company operating in Burkina Faso, which had security issues, and then came a merger, and the security issues disappeared. So this is back to, yes, absolutely, Tim is right, security, but the security, you manage it, and we go back to the way management is assessing the level of security and how they are dealing with it.
Thank you very, very much for that, Alan and Tim. And I think that we can actually have the polling result up sort of now. And I think for me, one of the key takeaways about today's 5 at 5 is whichever project we're looking at, whether it's Marenica Energy, whether it's Predictive Discovery, whether it's KEFI Minerals, they've all, like, three of them have got two things in common. They've got great management, and they've actually got great assets. So I would certainly encourage everyone who's dialed in for this week's show to go and sort of check out those three companies afterwards. With that brings us to the top of the hour, so we are out of time. So I'd just like to go and thank our two investor guests, who were Alain Corbani of Finance SA and Tim Markwell of the Line Selection Group. I'd also like to go and thank Paul from Predictive Discovery, Harry from KEFI Minerals, and Murray from Marenica Energy, who were our three sponsors for this week's show, as well as for the Resource Global Network for supporting this week's show as well as our media partner. So see you next time. See you at next week's show. Until then, stay safe. Thank you very much.